Hi everyone, today we got a bit of a reversal here on the charts. Not everything is broken, but it did reverse a little bit here. You can see we had consolidation yesterday. As soon as this level broke, that was the stop that we had in from yesterday at 574.71. Went straight down to the next level, so that was actually a pretty good short trade if you caught it. And then right now you'd be short from 569 to potentially 565, but let's take a look at the charts and see if we can find some zones of support, or if this is actually going to be a move to a lower low or not. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So in news today, we got more tariffs being announced, 25% tariffs on cars that are not made in the United States being announced. Of course, absolutely no tariffs on things being built here. He's trying to continue to encourage more reshoring of manufacturing. Of course, this does not affect the April 2nd tariffs. We're going to start collecting on April 3rd, he says here. So that is going to be about $100 billion in revenue based on what he's saying. We're going to see if that comes into fruition or not. But he says we have very strong policy. Cars are being hit. You can see vehicles in terms of percentage of sales. And overall, this is actually a little bit better than I would have expected from 2019 to 2024. Still mostly US, but there are some other players, and you can see Mexico is a pretty big manufacturing. A lot of those are still US companies, but they're manufacturing in Mexico. And then you have the European Union coming out and saying this is generally bad for business, generally bad for the economy. We'll see how that plays out. Maybe it's bad for their economy and maybe not so much for us in the long term, but in the short term, not great for the stock market. And in other news, we actually got pretty good news about some more leniency around reciprocal tariffs. Those are the ones we just talked about, supposed to be starting here on the 2nd, potentially closer to the 3rd to start collecting that money, but they say leniency here, so maybe not 100% reciprocal, but it's going to get closer to that. Again, a little bit more murky on the tariffs. This is supposed to be better for the economy, better for the stock market, but then you got the autos, not so good for the stock market, and generally markets decided the net of these today was a little bit bearish. And of course, the original announcements of this have pushed consumer confidence to a 12-year low and the stock market to about a 3% low, dipping to a 10% dip there from the highs at one point. Moving over to fear and greed, we finished at a 29. It says the previous was a 28, but if you look at the charts here, that was actually a 30 there for yesterday. So we did get a step down of only 1 point. Pretty light for the price action that we ended up seeing. You can see all the major metrics still in extreme fear. Got the put call ratio turning back up, volatility turning back up. We said that was a zone where we could bounce yesterday. We talked about that. And sure enough, we ended up bouncing from there. Safe haven demand, still extreme fear, but rallying towards that zero number. Junk bonds still hanging in there really, really strong. Moving over to the economic calendar, core durables came in way better than expectations. So we got really, really strong economic data on that, and that was not enough to allow markets to stay bullish here today. Atlanta Fed GDP still pretty negative, in line with expectations. 5-year note auction pretty much in line with the previous. Tomorrow we have the GDP numbers. That's going to be interesting. Want to see those stay pretty good here. The expectation is 2.3. If we miss that, that is going to be terrible. Fed balance sheet tomorrow as well. 7-year note auction, and then PCE data for the Friday. Don't expect a ton out of that, but if it comes in relatively soft, that should give markets at least a little bit of a pop. Moving over to the charts, we did get a pretty big down day, 1.19% here. We said as long as 574.71 held, then we're in good shape, but we did break below that during the session. So hopefully you caught it relatively early on this down move, and then we continued to go lower, momentum stepping back to bearish RSI, stepping back towards the SMA. So we still have the potential for a higher low setup. We still have a potential support zone in that SMA on the RSI. 9 EMA there as well at 566.26. So we're going to see if this zone holds or not. Right now, it still could. And you could still see this kind of higher low setup. The concern for me is that we have this kind of rising wedge type structure. Right now, it looks like we could hold this in here and push back up to this range here around 579. But if it cuts through here, then we're probably going back to that lower low or potentially even a double bottom in here. Just depends on what we're looking at. You do have a really strong trend support in here as well, right around the kind of 559, 560 area. So those are some zones to watch. But for now, we're still in this wedge. You should expect the wedge to continue and look for that next push. But again, watch it very, very closely, especially with that after hours price action. And then looking at the hourly chart, you can see 144 EMA holding as support right now, 566.51 on that hourly chart. You got the 200 down there as well. Definitely need that to hold. We did come down and test 565, probably expect it to overthrow to the 200, touch the 200, and then rally up if it's going to do it. Either way, if this zone holds, I still think we have a low, higher, low structure. Look for that push back up to this range here. But if this zone breaks, then we're probably going back to that 550 area. Moving over to the SPY charts here. On the Tasty charts, you can see we are really extended, well below that ATR band. I thought we would slow around the 569, and we didn't. We broke right through that. And you can even see the breakdown retest of the 144 continuation lower. So everything looks bad there for the SPY charts, well below that lowest ATR band. This is part of why I think we might see a little bit of a bounce. But the concern here is with that last candle, we did get back into bearish conditions, rejection off of that 144 zone that we talked about yesterday. We were hoping for a push to the upper ATR band, so there wasn't a ton of upside potential there. We were only looking for 575 to kind of this 579 area, so about $4, but we couldn't get that. Broke the trailing stop, closed below it, and now you're in bearish conditions at 577.57. Decent volume coming through at the end of the session as well, so continued selling, momentum bearish. Everything says this should continue a little bit lower. You still have that trend structure that we talked about, but it doesn't look super great on the Tasty charts. Then moving over to the NASDAQ, we did get a big down day there as well, 1.84%, absolutely abysmal. We said if we got below the 200 or back below that 492 level, that was going to be terrible, and sure enough, we were back below it almost immediately. Continued to sell right through that 486 level, and then after hours we did end up tagging my 481.94 level, and we're getting a little bit of a bounce from there. You can see I added some structure here as well. Looks a little bit more like potentially a bear flag. Again, not super great, but you do have a zone of support here. We have that 481.94 level. As long as this structure in here holds, we could look for at least one more push. If this breaks, then you're looking for another move to this kind of lowest low of another potentially 3% lower from that zone. So momentum stepping down, RSI, still have the SMA as support there at 38. Right now we're at a 44, so it might take a day or two to get into that zone. But as long as we do get some support in that zone, higher low setup potentially, then we could look for the push. But today obviously makes it look a little bit less likely. And then looking at that hourly chart, you can see pretty much straight down throughout the session. Once this zone broke here, pretty much on the open, we did get that continuation right to 486 and then straight through to that lowest band there, 482 at that 144 EMA, 482.19 right in there. If this zone holds, again, could look for a little bit of a bounce from there. It is super oversold in the short term, but if it breaks down, like I said, you're looking for these kind of lows back here, 472. And then potentially as low as that 468, 466 area. Moving over to the Qs here, again, you can see on the Tasty charts, super extended, break below that 144 EMA, obviously bearish conditions. We were grinding in the zone, which is what we wanted to see, but then we broke through there really quick early in the session, sold off here, right? So now we're going to see, are we going to get that lower high setup? On the 4-hour chart, right now it does not look like it. We're back into bearish conditions after that first candle, bearish conditions on the trailing stop, which right now is at 494. Could not get above that 144 EMA. We talked about that being a zone yesterday, but we are still showing a little bit of strength. You do have to keep in mind, this is the first test of that 144 EMA. We did have a similar setup here where we had grinding price action, got into bearish conditions, got a slight retracement, and then we got that kind of rocket ship to the downside, which carried us through to current. If this is another iteration of that, obviously watch out below, watch your levels, and be quick and nimble. But hopefully we can get at least a little bit of a retracement tomorrow. And potentially, and I doubt that we'll get an exact replica of that previous run to the downside. So if we do get a move down, lowest band is at 476. Even that would be a little bit higher than this lowest low. And then we'd be looking for a touch of that trailing stop, which right now is at 493.85. Moving over to the Russell and the Dow. The Russell was down only 1%, but it still fell through this level here. We did see selling there yesterday. We thought we might get a little continuation. I was hoping that 21 EMA would hold, and it didn't. That was at 206.06. We ended up breaking down to the level 205.07, and then after hours we're below it there. So everything looks a little bit worse here today. Not everything is broken, but certainly looks like we're going to go a little bit lower. The Dow is down about 0.37. 21 EMAs in there, still has support at 422.73. 9 EMA there at 420.21 or so. We'll see if this zone ends up holding momentum hanging in there. The Dow did do the best out of the group, but continues to sell after hours, so not super great with that. Moving over to the Mag 7. The Mag 7 sold off more than everything, 2.75%, back below that 283.43 level. We said we get touch 290. We ended up gapping down and falling from there, so Should have kind of seen that coming. We're back below this trend line as well. If you extend that out, that would take us just below that. And then you can see the 9 EMA there as support 277. We'll see if that zone ends up holding. But again, doesn't look super great. Waiting to see if we do end up getting a higher low somewhere, maybe even a double bottom. If you have kind of a base higher low set up in here at the 273, that would be interesting. But for now, does look a little bit bearish. Moving over to Apple and Microsoft. Apple was down 1%, Microsoft 1.3%. Microsoft continuing to underperform, but right now it is holding support at the 21. You got the level there, 388. 21 was there at 389.77. So if this zone holds, then you're in good shape. Momentum stepping towards bearish. RSI still has the SMA as support, but still trending a little bit lower. Momentum on Apple still good. We're still swinging to the upside, but you got 21 as overhead resistance. You can see we tagged 224.36 as the level of resistance, and then sold from there, round tripping almost the entire day yesterday, especially with that after hours price action. So seems like these are going to get a little bit of a rejection from there, waiting to see if this zone ends up holding or not. Right now it does look a little bit more bearish, pretty much like the rest of the charts. But structurally, we still have higher lows and higher highs. Moving over to Tesla and NVIDIA. Tesla was down 5.5%. Terrible there. For 280 was the stop loss there, so you should be out looking for potentially 264.68 as a zone of support, maybe. After hours, it's actually holding up okay. Tariffs against other automakers should be good for Tesla. And then NVIDIA, dumpster fire, 5.74%. Again, the stop here was 116.70, and we are well below that, so you shouldn't be looking at this until the trend line here around 108, 106.6. That is the zone of support and potentially a double bottom in there. If it cuts through there, then keep in mind that you do have 95.7 as my next level. So you got a low, lower low, and a high, lower high. So you should be looking for a lower low, potentially into that 95 area. You could find some support potentially at 101. I would be patient there, maybe as low as 98, but my level, like I said, I like this zone of consolidation back here, and the peaks of that consolidation was at 95.7 level. So that's where I think we're going if we do get a break of this area. Moving over to Amazon and Alphabet. Amazon was down 2.23, Alphabet down 3.27, continuing to underperform from Alphabet. Continues to sell to that 9 EMA at 167.14, after hours selling even more. So again, the stop there was 170.95. My next level, 161.59. So that would give you about another 3%. I would be cautious here on Alphabet. Amazon, however, you do have that 255 level, so you could potentially still be in this trade. The after hours would take you out of it depending on how you're trading. Momentum still slightly bullish, RSI still slightly bullish. Maybe we get the gap fill. That would be interesting, kind of the 196 area gap fill and then continuation back up to the 212 area. I still think 212 is in play, but it looks like we're going to get at least a little bit of a retracement from here. Moving over to Meta and Broadcom. Meta was down 2.5%. Broadcom continues to crater here. So semiconductors selling off. Those were market leaders, and now they are leading us to the downside. So that is, again, a not great indicator here for Meta, for Broadcom, and also NVIDIA. You can see this consolidation, broke the low of this consolidation. The level there is 175.74. If this zone breaks, I don't have anything until this 158, maybe 159 area back at the lows here from end of November. So watching these closely, semiconductors continuing to drag markets. This is something I'm going to continue to watch here on the channel. Moving over to staples and discretionaries, you can see staples, big pop here, 1.5% pop. So you have a big reversal on the risk on markets we've been seeing. Staples bouncing aggressive, discretionaries selling here back below that 203.98 level. That was the support. We were looking for the continuation here. We didn't get that 2% run. We ended up getting a 1% sell through that support area. The good trade was on the Monday, didn't get the follow through Tuesday. Now we're looking to see, does this come to a higher low setup? Do we fill these gaps? Similarly here. And then looking at staples with the break here, we're at 79.90. We've closed there to the penny at the level. So really perfect close there. If we can get through there, 80.54 is the next level. If we break down, 78.88 is the next support. which is pretty much where we opened today. Really interesting candle, almost level to level, start to finish. Moving over to breadth. Breadth actually held up pretty well considering the selling that we saw on markets. Markets were down obviously across the board, but we got breadth hanging in there in this kind of 55 area for 20. Still above the level here on 50, which for me again says probably going to get a little bit of a higher low. We don't know where that higher low is going to be yet, but market breadth is saying this is probably just a short-term pullback pending some potential news around tariffs. If the market structure continues to hold, we should get that higher low set up here. As long as breadth continues to stay strong, then we should see that swing up into these areas that we continue to talk about, the 68 to 86 area, and then that kind of 50 to 62 area here on 50-day breadth. Moving over to the dollar was a bit of a rocket ship, so we got the level break there, 104.4. We've been watching that. We said if we could get above it, we should be looking for 105.5. Really strong push there. So far, this continues to look bullish. Up about 0.5%, momentum bullish, RSI bullish. Clean moves here, really strong moves, clear through this level here. Maybe this is a little bit of why equities were falling today. We're getting a push on the dollar. Usually dollar strength means weakness in equities, and so far that is what we're seeing. If this gets continuation, that could be weaker for markets over the next day or two, but we'll see. Maybe we hit resistance in here at the 200 and then get a push back to this kind of low area around 103.2. Moving over to bonds. Bonds had a big sell here today. Risk off markets kind of move on J&K, moving back down towards that support area. If this is going to be a high, lower high, and we end up getting a low, lower low, that's going to be very concerning. That's going to start to signal a potential recessionary environment. If we start to break below this structure on J&K, want to see it continue to chop within this zone. We've been here for a long time, July of 24. Realistically, we got here in December of 23. So we've been here for over a year. Want to see that continue on bonds. But this is a little bit of selling here, about 0.5%. Interesting to see that. And then looking at TLT, down about 0.5% as well, right to the level. 89.16 was the level. After hours, we're getting a little bit of a bounce. Momentum bearish, RSI bearish, but price action is king. We're seeing some support there. You can see this has been a very important level over the past couple of months. Pushed right to it a couple of times. We're right here once again. Want to see this zone hold and rally. Moving over to volatility. Volatility did end up bouncing from that trend line. We talked about this zone being an interesting area yesterday. We touched that trend line yesterday. We touched it again here today, and we bounced back into that 18.5 area. Are we going to get a lower high setup in here? Maybe around 20 to 21. That could be interesting. But right now, you do have a low, higher low, looking for a bit more bounce here. So the VIX is signaling we're probably going to get some continuation to the downside. A little bit of mixed signals between this and market breadth, but something to watch here. Volatility saying we should get a little bit more bounce coming off a clean support area. Moving over to my accounts, I did lose a little bit here today. I'm still positive on the week, but we did go down a little bit more than I wanted to with the markets. A little bit less than half, which is kind of in line with where I want to be. Still holding out really well in my IRA, which is good, but really wish I did a little bit better. Didn't follow my rules as closely as I should have. Multiple iterations of that, which was a little bit frustrating. So continuing to hone the execution of that trading, which feels like forever. In terms of positions, 480 for a dollar credit. Again, after hours, not so great. Still well below that level. Still want to look for at least a little bit of a bounce. I feel like we were just oversold. $9 in a day is a lot. Almost 2%. With the after hours, it's 2%. We saw how extended we were on the Tasty charts. It just feels like we're going to get some kind of bounce. Not a super great strategy there, but right now we're still holding the level. If the level breaks, obviously I'll take all of this off and let markets try to fall without me, hopefully. Either way, took off my Russell position, looking for just a little bit of bullishness early in the session tomorrow, pending that GDP data. Let me know down in the comments section what you think of the auto tariffs. Do you think the sell-off was warranted based on that? Are we selling off for different reasons? Let me know. And what do you think we're going to end up getting from those reciprocal tariffs? Are those going to actually be reciprocal, or where is there going to be leniency? That could be interesting as well. What do you think? Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.